Hello, Warriors. Welcome to F.A.C.E, Forex Analytics Community Experience. How you doing, Alexander, Michael, AJ? Who else is around here? Bran, okay. This is the day of days. Derek Miller, nice to meet you. Hi, Sinatra. Mike Delfino, how are you? So you're here for live coverage of the Consumer Pain Index. Hey, team, how are you?
The Clean Pants Index.
Yeah, something like that. I know it's an important number, and we're all looking for trading opportunities going into it. I'm actually going to try and sell the yen into this gap. But I was thinking about this, guys. Could you have imagined at any time during your life that there is a possibility that next year we could have one candidate being impeached and the other on trial? And do you think that overpowers any kind of economic Fed data points with what we're looking forward to in 24? Does the political, what do you think? Yeah, what do you guys think?
I think
if I'm honest, I think it's a bonkers that we're in this situation in the first place and the market's not taking notice of it.
Yeah. So, because it's so far away, right? It's only a year. And those two things may be happening well before the elections, the conventions. Anyway, just I felt like I was in the twilight zone when I thought.
Yeah, sorry, I spoke over Kay there. I don't know if he had a point as well.
Yeah, well, go ahead, Kay.
No, I think it's just the market is probably going to take it as bullish and buy the fucking dip on everything.
It doesn't matter.
It doesn't matter.
It doesn't matter.
No.
Yeah. You can't stop.
Doesn't matter. Jail doesn't matter. Nothing matters in this market. Just buy everything.
All right. So what do you think?
Bonkers, though. It is bonkers, though. You've got the current president who can't remember a conversation he had with a world leader the 5 minutes before, and you got another one who could go to prison, become president, and pardon himself.
Right. I mean, it really definitely is surreal.
I want to add really quick is that I believe that the market has become very numb just to politics in general over the last 4 to 6 years or so.
Could be.
And so it's quite.
It's all about money flow. As long as it doesn't stop the water hose of liquidity.
Yeah,
that's all it cares about. So, all right, let's get to the market and plans for either going into it. I was looking. I'd like to tip my hat to you, Brian, on your. I don't know if you took it or not, but you were buying euro yesterday near the big figure. Had a nice pop, about 50 pips or so. Are you holding it into the number?
Yeah, I hold it into the number. I'll keep my stop tight. I don't mind getting knocked out on the stop. I can re-enter it after the data if need be. Yeah, we've had that little pop up in the euro on this ECB sources piece last night that they might be taking 2024 inflation forecasts above 3%. The last forecasts are at 3%, and that's what the ECB is all about. They set their policy on these forecasts.
Okay, so that's tomorrow.
Yeah, that's tomorrow. And, last week, 30% chance of an ECB rate hike. Today, 75% chance.
Okay. And will you use that? Is this a counter trend long and you'd be looking to sell euro if the euro liked what happened at the ECB?
Yeah, I mean, this was just a reactionary trade. Just if that level holds, just maybe get a bit of short covering into the ECB. I think the trade for the ECB now the balance of risks is that they don't do anything at this meeting. So if I think the trade for the ECB tomorrow, and we can obviously talk about it tomorrow, is to trade an unchanged headline if we get a dip in euro dollar. On an unchanged headline, because I think if those forecasts go up, the guy's going to talk hawkish about a possible hike October or the meeting after if they don't hike at this one.
But Ryan, I wanted to add, and this is something that we can obviously continue to talk about, but I think CPI is going to really play well into tomorrow, and I think that's like the setup that really is the setup du jour today in FX markets. If certain things happen, but anyway, I'll take a step back because I bet K-Man's got some comments here too.
Yeah,
regarding
I
this.
wanted to ask K-Man, but I just wanted to draw this. You can't call it a flag; it's like a rectangle. But to me, it's a continuation formation in silver. Even though we could pop out the upside and get a rally back to 3.5 or so, but if you just take it classic tech analysis, the length of the flagpole, and tack it onto a breakdown gives you 2060 for a target which isn't that far away from the harmonic target of 2040. So, that's something I'm waiting for. I'm waiting for this. My magnet line came in.
It goes down there.
Huh?
Goes down there. Let's both order some trucks or whatever on Amazon or wherever, and then load them up.
I plan to. I'll be buying miners too, the silver miners. That's what I'm going to be patient for. It could happen in a month. Could happen in a few weeks. So I want your take on the fact that we're eating into this gap in the yen. And I, besides having the advantage of talking to you, and I'm interested in what you have to say. Do you think we're going to fill the gap and take it out? And
well, I mean, that's just going to need 0.1 or 0.0 beat on the top side of the CPI today to fill the gap.
Okay.
Are we going to sustain it? That's a different matter right now.
Okay. I have orders in. Tell me if you think it's foolish.
Don't go too early. Don't go too early, because if you get a low print, your orders won't be filled, and if you get a high print, I reckon you're going to be done at or close to the top there, 147.80. If you want to sell, I'm not especially bullish yen. I'm still trading it, but I'm jobbing it. I'm not even. But
it's a shot.
I think
it's a shot.
I think with this monster stimulus package that the Japanese government is planning again, then we really will have to see what Ueda wants to do with Japanese yields.
Yeah,
I'm still not in the yen bull camp.
Okay. So we could go to 149, 150 still. And this was just a little shakeout move.
Yeah,
the market's getting back.
Okay. Just because of the volatility of the yen as well. If you look at the comparison with yesterday's piece on the ECB, well, that was worth 40 points on the dollar yen. It was worth nearly 200 because of the volatility as well of the piece. But we're like slowly coming back to where we were. It's I don't know. It's well.
Is there anything you want to do?
I'm not ready to sell dollar yen. That's all.
All right, and you're still negative euro. You're sitting with there. Okay.
Yeah, because tomorrow it's either a dovish hike or a hawkish hold. And it's going to go in different speeds, but unless because what caught my eye as well, and I think that's why the market is coming back to where we were before, and this piece came out, is that you can hike your inflation outlook, push the ECB higher, but then the piece also said that they will probably revise growth lower. And what do you do with that once the ECB hikes in a lower growth environment? I mean, I'm very sure. I bought downside as well this morning because I don't want to have too much cash in position because of CPI today, because of the ECB tomorrow, and I think some may try to buy euro ahead of the ECB. So I don't want to have the cash to take that risk, but I just paid away some premium on an option for the downside again, euro dollar.
Okay. All right. So, I have the advantage of talking to, Blake and Ryan and K-Man here every morning. And you know, the guys I interview, but I also have an advantage of, I respect Grega Horvat's work, and I could always just, you know, go check out Grega and see what he's looking at in the end for his wave counts to make me think about whether I want to do the trade or not. So just, you know, plus something else I don't do. We also have a guy who does harmonics, which you know, is something that I don't do. I find Andre's work very pretty and nice, but they look like something you could hang hang on the wall.
Hey,
You should
speaking
go
of
into NFTs.
What?
You should
I was
go
going to
into
say, speaking.
NFTs.
Sorry, go ahead, Ryan.
No, go
I'm
ahead.
saying you should get into NFTs with those charts.
Yeah, yeah.
Hey,
Yeah.
I was going to say, it just so happens that we have Grega Horvat's here too.
Oh gosh, I didn't have to sneak around.
I'm here in the background listening carefully what you have to say.
All right, Wizard. Well, what do you think of my idea of giving the yen a shot, selling it here after the number, looking for a gap fill, maybe risking 100 pips?
Yeah, I mean, I certainly think that market, since dollar is trading not far away from the highs, that this important data will not allow traders to make money with small stops. So in my opinion, there will be new highs.
New highs
in dollar in general, yes.
Okay.
So I think that those gaps that are still open on some of the pairs since Sunday, I think that they will be filled, but dollar yen, such case, could potentially even see a slightly more upside than rather just stop at the gap. So I think that there is room for more gains, but in general speaking, when looking at the dollar index, I still think that this 105.50, 106 level is important resistance. So I would not be looking for any kind of dollar shorts yet, but if we see, let's say, today's spike to new highs and then turn to the downside, let's say tomorrow after ECB, then we will have reversals in play. But for now, I still think the dollar is in track.
Okay.
I mean,
thanks,
if you also look at some of the recent price action, even on Aussie Kiwi, all of the price action from the recent lows is really look like a small correction on the way down.
Okay. You getting anything, you know, I'm starting to think that this in the Aussie is starting to look like an ending diagonal. Am I crazy?
No, it can be, of course, or it can be a bearish triangle. In either case, I mean, and if you look at metals, they look very weak. US yields, in my opinion, are screaming for a new high. So we can be close to this to complete the higher degree patterns, but it looks like that we are not there yet.
Okay. And being wrong, the key thing, besides directional biases that Grega said, was you can't trade with small stops. Now, I don't think it's only on CPI and red numbers. I think that if you can't be wrong for a day, which means risking the daily ATR of any instrument, how can you be right for a swing trade if you can't be wrong for a day? So if you're trying to use these 20, 30 pip stops off your 15-minute chart, your broker will love you. So anyway, that's my lesson for the day. Churn yourself, churn yourself as much as you want. Maybe your broker will send you a cash rebate and you'll make money off your rebates, but not in the market. So where's your head at, Blake, coming in today? I know you were talking about fading a hot number in the dollar. So
yeah, so talking about like going back to the week ahead video, so just, you know, backing it up to this weekend, the way I really wanted to trade this is trade it into a hot number, but use that hot number to reverse going into the ECB tomorrow. And now the news overnight, or as Ryan, you pointed out, it was a Reuters article, wasn't it?
Yeah,
I believe. Reuters article that really tilted the scale, that, you know, there's about a 50-50 chance that the ECB was going to raise tomorrow. Well, that scale has been tilted more like, 65, 70% chance that the ECB is going to raise rates tomorrow. And so that brings into play like today's data. I still think that we're going to get some hot data, but I want to use that hot data to, play the euro back to the long side if the data's, like I said, if it's hot. So if you're looking at the euro, what I'm hoping is going to happen today is we're going to see, you got this like, flag kind of pattern setting up. You're going to see one last push into 106.50, and then you're going to see a reversal after that. I want to play it as a reversal. So in other words, I want to get long somewhere down here around the 106.50 level on a fresh low, because if you look at this technically, Dale, RSI is mid-range, right? So we have a 4-hour chart. RSI is right smack dab neutral where it should be ahead of data. So if we do get a push lower, as I'm illustrating here, the RSI shouldn't hit a new low, right? We should be divergent. So
bingo. Yeah.
Okay. So then
Cool.
that puts us into tomorrow's ECB meeting with, hopefully, if you get lucky, that if you get lucky, the ECB does raise rates, but maybe it's more of like it's a dovish hike where they raise rates, but then they clearly tell us that the job's done, or their job's done near term. The euro rallies back towards 107.50, 108, and then you can use that as a reversal to trade the dollar back to the long side ahead of the Fed next week, because the Fed's not done, I don't believe. And so I think this setup is perfect. Now, whether this all happens the way that I'm, planning it out is another thing, but that's where my head's at. Yes, where my head's at.
I think that's a key point. Sorry, let me shut up, Walk. I think that's a key point, Blake, because if the ECB don't hike, they're likely to be hawkish in signaling that they may still hike, or hike the meeting after. If they do hike, they're likely to be done on that, and that'll be a top. So it's almost like you get a hike, it's likely going to be bearish for the euro after the initial reaction. You get a hold, it's likely to be bullish for the euro after the initial reaction. Right,
and you're exactly right, Ryan. And here's the problem in my view is I hope the ECB doesn't hold tomorrow, because I want it to be one and done, because I want to be directional with the dollar. I want to be a dollar bull. I want to be a euro bear, and I want to play into hike, get it out of the way. Then we know that they're done. At least in near term, we'll know that they're done. But I think that the wonky part would be if the ECB doesn't hike tomorrow, and I think you've got to give yourself. I think you've got to give yourself room on that trade. Let's say we get a hot CPI, euro dollar goes to 106.50, you go long. Right, if we don't bounce a lot after that because everyone's waiting for the ECB, if the ECB then don't hike but signal another hike, you might have to wear an initial reaction maybe down to 106. Yes, that is for sure.
Out for 30 pips, and then it does the old reverse when Lagarde goes, we have a hike today, but we're going to hike next month.
And you're exactly right, Ryan, because if you look left, and I'm gonna take you back over here May of this year, you can see that low is about 106.40. There's a good chance that the market will take us below 106.40 just to shake the trees, right? It's like grabbing Dale and putting him upside down and shaking him real hard and seeing what falls out, right? I mean, that's what the market likes to do.
Lint.
Lint. That's all you get. You get lint. But I think that it is actually, if you look at it technically, like I'm going to just, take this line and you can see it's duplicated, and you connect these lows right here. That channel support also comes in around the 106 level. So Ryan, I think you're exactly right. I mean, but then you have to think where we're at right now. We're at 107.30. To get the euro to 106.30, we have to have Cleveland Fed CPI expectations met today, and that is a big number. Jim Welsh, when I met with him last week, I have to, whoops, that's not what I was looking for. I have to think about that, like off the top of my head. The CPI data that the Cleveland Fed was looking at was for the core CPI was at 0.5 or 0.6%, and the headline number being closer to like 0.8%, something like that. If I'm not mistaken, these two pieces right here, I think that's what the Cleveland Fed's looking at, but that would be
gotta go with the Cleveland Fed. Cleveland beats Joe Burrows in Cincinnati this weekend, so you have to go with the Cleveland Fed.
Yeah. Mike asks, hey Blake, did ForexAnalytix funding program payouts got affected by the deal issue? No. Actually, no. If you need a payout, the trader funding program is still sending out payouts. So there you go. Now that's going to be how I'm approaching the CPI. K-Man, what are your thoughts here? Because I haven't heard you talk about what your plans are today in the markets. Well,
okay, if we get a hot, really hot one, and I'm especially looking at the core, to be honest, which is expected to come off, right? Because the headline can be a bit more volatile, I reckon, and the core is in the end what the Fed is looking at together with PCE. Yeah? If that comes in a little hotter, I'm going to be tempted to buy a bit more dollar rand, and perhaps buy some MEX as a US neighbor. On the back of it, if it comes in weaker, then I guess we are going to be trading very close to 108 before going into the ECB tomorrow. And yeah, then likely dollar yen is going to cap here. But if we get a hot one, I could see dollar yen break that prior high and try into the 148s.
You know, that's a great point that you bring with the euro, because like let's say the data is just not impressive. Like, everybody's coming into this looking for hot data. I mean, I have to assume that's what everybody's thinking right now. So, what if it's not? I mean,
but then do you trade the headline or do you trade the core? That's always the problem if you want to trade. Which one do you trade? And I'm more tempted to. Perhaps you can compare it to what's happening in the Canadian labor market. You got the headline number, and then you got the balance between part and full time. And it could be a bit the case that we see the headline CPI get an algo move, and then people look at the core CPI and say like, oh well, perhaps not. The initial move. But yeah, so we'll have to look at the balance of both, I reckon. But yeah, that's couple of trades like that. If it comes in hot, then I think cable may be a bit in trouble, because we are not too far from that 124, 45, 50 support. We tried it after the numbers this morning. If it comes in a bit too hot, then I guess that may be toast for another 50 or even 100 points, perhaps. I don't know. But
yeah, and the 200 DMA is just finally caught up to price now. So it's like you're right. It's like trading so heavy. I've been surprised really over the last week that the cable just cannot get a lift. It's been, I would be worried. If I was long, I'd be worried. Right. Yeah. So good looks, K-Man. Ryan, let me ask you this. I know you're playing the US dollar CNH. Are you going to be playing it today, following the data? Is this going to be something that you're going to look to play into, or not?
I need about 8 hands at the moment, because I'm short dollar China up the top there. So I've got enough margin in it. So I'll probably just leave that one alone for now. It's still heading in the right way, still struggling to go up significantly after that pop. I'm long dollar yen, as you saw yesterday when we were on the show yesterday. So I've got a bit of margin in that. I'll be juggling that one. I'll be juggling my cable longs at 124.50. I'll be juggling my euro dollar longs. I'll be juggling my dollar CAD longs.
So you're long some cable. I hadn't paid too close of attention in the last 24 hours. I looking in our chat rooms and the trade rooms to see that what you were doing. So you're long some cable here.
Yeah, long cable, playing off that 124, just sort of jobbing it on the rallies, getting out on the rallies. I think dollar CAD is going to be the one for the CPI, because I'm still long, and I've just dropped a sell order in at 136.50 if we get a really hot number, because I just think that the balance of risks has tilted a bit more to the CAD side. So I might get in a short and exit my longs if we get that pop.
Yeah, the one thing that the dollar Canadian, what I was going to say, the one thing, one of the things that the dollar or the Canadian dollar has going forward is, crude oil just continues to blast higher. Now, by the way, if you guys missed it, crude finally touched. I mean, I think we came within, let's see, the high there was 89.60. We hit the 89.69 level, which would have been the 161% extension of the last move. 10 cents. Dale, that's close enough, right? I would say, yeah, that's close enough. Yeah. So, the target of crude oil reaching up there made sense, and it's something that we've been looking at, the 89.50 level on this bullish wedge. But if you look at crude as far as the flag pattern goes, it still goes to the mid 90s. We're just not going to go up there in one straight shot, but with crude oil, it looks bullish. It's not backing away. So the stronger crude, continues to rally. It should eventually give the Canadian dollar a boost. And, I know, Grega, you were looking to play the Mexican peso on the long side due to stronger crude oil. So you're still looking at that trade as well?
Yes, I think that we have a pretty nice recovery so far, and I'm not really sure if that was the top here, the chart that you just closed it.
Yeah.
Or yeah, you can show the wave count.
Yeah, I'll show the wave count here so people can see.
Yeah, so actually that wave C is now possible. I have to update. I will most likely update the charts tomorrow in the morning. So we hit this 1750. We came pretty close to the resistance. So I think that this correction that we've been discussing recently is about to complete, and possibly that was the top. It really will depend how dollar will close today, but if really we are going to see some dollar weakness, maybe Dixie will spike higher and then turn maybe tomorrow, who knows. I think the dollar Mexican peso will be a good short.
Great. All right,
dollar
thanks,
versus
Greg.
Mexican peso, yes.
Hey, really quick, I want to show you guys something. This is the dollar index, and this is kind of like our longer term. You could see that channel that we were watching. I think Rohit, he was on here last week, Dale?
Yeah.
From I believe he's in
India
Mumbai.
charts.
Yeah, India charts. He's great. He was looking at the same channel. We finally broke it last week. And you notice that we came back and just retested the channel breakout point. And so you can see we came down like literally to the pip. So it shows you where the dollar, like I would say that the bull bear line is at 104.40. That means while we're above that, being bearish, the dollar in any way, shape, or form is just, it's going to be a little bit more difficult. The dollar index still looks, we're still looking at like the 105.50, 106 levels to see if we can, make fresh highs and make a new high above that resistance. But I think the dollar index is pretty well defined here. Speaking of which,
how about risk, Blake, before the number? S&P's failed a couple of times near that resistance. It looks like today's a very important day for the S&Ps as well.
I think it is. I think we're sitting on support. I mean, this is channel support. You can see we're slightly trading below it, but it can obviously fluctuate here. It's been our big support, or you could call it a high traffic area, just a zone that we've been following. So yeah, I think if we break, below 44.50, we're looking at probably move back below 4,400. The flip side is this channel plays and we'll be trading up at 45.50. So you can see if you just go like that, we're probably just in the middle of a range right now, looking to test the lower end of the range.
30 seconds, Blake.
Oh, shoot. Okay. Thank you. 30 seconds it is. Let me pull up. Here's the S&Ps over here. Let me put the dollar right here. I'm put it on a 15-minute chart, and let me pull up the Data flash, go over here, pull that up, ForexAnalytix, move that over and move the data flash over here. And we've got data in 5 seconds. Hang on, folks. Here we go. Dollar on the left, S&P yields over here. Number, strong data. It's got to be strong because
month-on-month core.
dollar
Hot
is
headline, inline, core.
Voilà.
core. Inline and core is strong.
7%.
And relax.
And that's it. Oh, well, here, look at the dollar index. It is on the move right now. Let's see if we can get that euro below 107. I might actually get long some euro below 107 if we can make it. But I don't know if we're going to do that. What do you guys think here?
I'm short the yen on my resting order 60, 47.60 with a 100 pip stop. See what happens.
You're going to get short some yen, huh? All right. Well,
I am. I had a resting order in there.
Oh, okay. What do you think, K-Man? Real quick.
Well, I think it's going to be a non-event in the end.
No,
That's
yeah,
my
well,
thought.
you can see
I
the
think,
dollar's back
trying
away,
to break a few things, but I'm not sure if it's really going to break straight away. But
well,
yeah,
let's see.
it's looking like, yeah, I still like the dollar, but I mean, I'm not sure if this number is good enough to really get things going far.
Gold and silver getting hammered, especially silver, breaking down from that flag. So anyway, we cased it pretty good. Ryan, what are you doing with your 55 open positions here?
I've just chopped the dollar yen in the 70s.
Okay.
So that's all right. The others I'm just going to watch for now. Yeah, just keep an eye on yields. They're ticking up to that high point, 4.36. If we can't hold that, then we're probably going to see dollar fall back. But I agree with Kay. It's give or take in line with expectations. There might be a few people who think that the CPI is a bit hot, the headline number. And we got to remember the core lags, because remember CPI was coming down and the core went up some months ago. So, you know, the core may start catching up with the CPI if that keeps going higher. But I think if you get another high print next month, even if the core comes down, the market's going to get worried. But for the Fed, yeah, they can hide behind that core number if they so wish.
On my platform, the yen missed the gap fill by 1 pip.
That's why I hate trading gaps.
So far.
Yeah, well, just take a look at the euro really quick. We came down to, you know, what I was drawing earlier, a little trend line here. It's holding for now. And remember, we have the ECB tomorrow. And after yesterday, some hawkish ECB, you know, potential. That could be the catalyst that drives the euro back up towards 108. So be careful. It's not one piece of the puzzle. We got a lot of puzzle pieces that are spread across the spread across the markets over the next couple of days. So it's going to be an interesting one. Dale, I want to say I know you have an interview here. Do you have your person here? Okay,
yeah, Bob is here.
Okay, and if you know, I just want to say that have a great interview. Thank you, Ryan, K-Man, and Grega for being here today. We appreciate all you all listening in, and tomorrow's going to be an exciting one because we're going to have the ECB while we're on F.A.C.E, and then after that, we're going to have after that we'll have the press conference, but that'll be during Dale's interview. So you guys all have a great one. Thanks for being with us today, and make sure you all stick around for Dale's great interview.
Yeah, interviewing Bob Coleman, silver specialist. So thank you, team. Kay, Ryan, Blake.
Thank you,
good prep work today for the community. Good hunting, Ryan. I hope every one of them is green. All your trades are green by the end of the day. So
yourself, mate.
All right. Thank you very much, guys. All right. So Bob, welcome back to F.A.C.E. How are you? I've unmuted you.
Can you
Bob
hear me
Coleman?
now?
Got you, Bob. How are you?
Okay. Good. How you doing?
I'm doing okay. Do you have anything you want to share today while we're talking?
Nothing like watching your asset class go in the tank right before an interview.
Okay. Okay. Well, then you just answered my question. Are silver squeeze people becoming so discouraged that we might now we might be getting closer to, a very important buy zone? What do you
Yeah,
think?
I see that. I see that. I talk to people in the industry. The physical activity has really slowed down. It started basically back in May and June. I guess really June is when it started to kind of see some serious slowing. And then as you went through the summer, which typically in the precious metals business, it gets pretty slow during the summer. It's just the vacations. And then you also have in Europe, a lot of refineries and workers go on vacation as well. So you don't have as much activity. Very normal, nothing out of the blue. But I think what we've seen is, at least within the industry, premiums have come down pretty hard across the board. And I think you saw, there are probably dealers
And a
out
nice
there.
reversal in gold right now. We're down to
Yeah.
1905.
Yeah.
Dollar is fading a little bit here too. Go ahead.
Yeah, if you want to look at something kind of interesting, I don't know if you can pull it up, but the gold volatility index, GVC, it's a
Yeah.
Golf Victor Zebra.
Okay, let's see if I have it.
This is
See,
back.
these were things you're supposed to bring.
Oh, sorry.
You want to talk about something, no, I don't have it.
Yeah, just GVZ, just Golf Victor Zebra or Zulu. There you go.
Okay, let's see. I only get it delayed, but
no, that's fine. I'm more interested in the longer term chart. It go back 10 years, something like that. We're back to levels that we saw in 2018, 19, where gold was $1,200, $1,300 an ounce. That volatility, I mean, it's the old adage, never short a dull market.
yeah.
And we're getting dull. I mean, and you're absolutely spot on with sentiment. It's, you don't see as much interaction on like social media, Twitter, that type of thing. People are, they're getting tired of the mantra from a lot of these physical precious metals dealers that, the BRICS currency, gold, gold back this, gold back that. Though there's a lot of that that's trying to hang on a thread, trying to keep people interested in the marketplace, but there just isn't a lot of news. This is an asset class that's really driven a lot of times by events, especially the last 3 years, and there just hasn't been much. It's just is not that. It's kind of like we're in the middle of this, like the eye in the storm. It's just very calm right now.
Okay, so how do you think silver is going to be affected when they roll out the CBDC?
I mean that the CBDC, I guess. I don't know. I haven't read really much about, there's the Fed Now program, but that's more bank to bank. That's not necessarily, you get a some type of debit card or something like that, or electronic card from the government, and they control your wallet at that point. But I would imagine if you get anything going down that road, that's a more, you can look at that as Big Brother, fascist type of, that's the worry and concern that you start to see with monetary controls, where you start to say, well, if you don't agree, it's like, being supporting the truck drivers in Canada, you basically get your account turned off. So that would bring people to an asset class that is sort of bearer and instrument, that provides some degree of independence and ability to transact without relying on the system. And that would be helpful for the physical metals, no doubt.
How's it going to help you in a system where you have to be in the system? What's going to be the purpose of silver? Strictly a dollar hedge, or can you see it being used as barter?
Well, barter, you still can collateralize. I mean, that there's, I think a lot of people in the physical world, a lot of investors may not understand, they point to the word manipulation a lot, but in the physical metals market, there's a lot of industry that will finance and use gold and silver for, just like they do any other type of financial instrument. So and I think that's where we're seeing some of this, tokenization and that type of thing, where maybe it becomes a little bit easier to begin to tokenize physical metal, and then use that as collateral for something else. That might be one of the evolutions of the metals going down this digitalization, I guess you could say. Not that it's good or bad. It's just banks and any type of trading institution will find ways to use assets to generate trading fees. Basically, it's the old Wall Street adage. They make money on the movement of money, not necessarily sitting on money. So that might be something down the road that gold and silver become an instrument that maybe is a little bit more involved. Something I would like to see, definitely, because I think the problem I see in the industry right now, especially the last 3 years, a lot of people who bought the metals are really underwater. I mean, the premiums have been so high that you're looking at $35 plus for a lot of people just to break even. Based on all the premiums that they've paid for the product and so forth. So that's something that I think it's changing. I think the last 4 or 5 months, people are they're not jumping into the fray and paying these high premiums. They're more sensitive to that fact, and they're saying, listen, this isn't the insurance policy I was sold that silver's going to 200 in 6 months and gold's going to go to 3,000 or 5,000. Now that hasn't happened, so people are pulling back. And then you also have a lot more competition with the metals right now, because you have interest rates 5.25%, 5.5% on T-bills and things like that. You have alternatives to go at, and
I just listening to you, I am getting so bullish.
Yeah, totally. Well, I mean, that's why I keep pumping out this information on Twitter. It's like I'm going backwards in time.
You sound so frustrated that I really can't wait for 2040 silver.
Yeah.
So anyway, we could have a rally here if the dollar relents for a little bit, but I think there are major buying opportunities coming in both silver and gold. I still think gold's going to take out this 1882. But I saw a few tweets that were interesting last week. You were talking about lease rates in gold, where you hypothecate gold position that lease rates had doubled. That was you, wasn't it?
Yeah, borrowing rates. That's basically when you go to short a stock, for example, what the broker dealer will charge. And you look at these. What I like to do is try and look at the breadcrumbs everywhere and try and see what I can find that may be giving some inkling of direction or sentiment or some type of you're getting into some sort of extreme or something that you can fall back on based on history, and you see these borrowing rates start to jump a little bit. It was telling you the market was getting short, and then we got this short covering bounce that we saw. But what's happening is these players are trying. It seems like it's all in the paper markets. The physical market's fairly quiet, but the paper markets is what's bouncing this thing up and down like a yo-yo. You're having CTAs taking positions going short. That doesn't work out because they can't get the volume follow through. Then they cover and it bounces back up, and then it's wash, rinse, and repeat all over again. That's what's happening. From a long-term perspective, a guy like me that buys physical, and a lot of investors, this is just noise. I mean, whether you buy it at 20 or 22 or 24, from a long-term perspective, I don't think it's going to matter, because right now a lot of primary silver producers are losing money or just breaking even at $22, $24 an ounce. I mean, it's the industry is seeing a lot of pain right now, and you see that with the mining stocks. You probably go through that on your charts and that type of thing. I mean, it's not a very easy market for the I guess the investor side, because there is a lot of frustration because the price of the underlying commodity just can't get out of its own way.
I'm looking for one more low in AG around $5 for a third drive to bottom completion. A lot of these juniors are pressing the lows right now, and that's with silver still way off the lows. So you're
Exactly.
right. The miners are suffering. This one may not make a new low. I may buy some next week or so, 250, and even the gold. The blue chips look okay, but I still think they could work lower towards this 25 level, 24. But we're
Well,
getting closer to what I think is going to be an inflection point, and the inflection point's got to be the dollar. I mean, gold could rally with a strong dollar. It can do that dance. Silver cannot. Silver needs a bear market in the dollar. So we need to finish off this rally in the dollar before you're going to have any bull market action in silver. And we're getting closer, but I don't think we're there yet. I mean, I think 108 is viable before this dollar peaks. So, silver did well here, right? From last October, that was a falling dollar. Silver needs a bear market in the dollar to do well. Historically, that's the case. So that's what you have to be watching if you're a silver trader. You trim your long positions when the dollar's a wrecking ball. So the wrecking ball still could keep swinging for a while. Yeah, you talked about even in the ETF SLV that, just like the lease rates, borrowing rates went up in gold, there wasn't as much SLV stock to short as
right.
there was. What about that?
That's where it gets kind of interesting, because you've been seeing, as the price has been pulling back, or even if the price has been rising on silver, you've seen a lot of shares, I guess, being redeemed. And so you've been seeing a lot of metal leaving the SLV. And at the same time, you've been seeing the short interest trying to come into the market and short it down. This is, obviously we don't know who the players are. I wish I was a fly on the wall and I could, figure out what's going on. But you don't know if it's the authorized participants trying to deleverage, their book, so to speak, and the metals are just part of that book, or if it's institutions just getting washed out and just walking away. Like you said, with the dollar rising or interest rates going up, they're playing the playbook, like the same thing they played last year with selling the paper down. The problem we have, I think, right now is the physical market. India saw a massive amount of buying last year. This year, it's just been dead, and you just don't have any. You don't have any demand that's supporting the market. Frankly, it's, you look at the demand out there, you look at the action. I'm surprised that silver is even where it's at right now. I mean, this is actually a fairly strong sign for it to be where it's just sitting in a real tight trading range, going, bouncing along between 22.5 and 25. Normally when you start to see, when you get stuck in a trading range and an asset goes up and down, very, very quickly, and but stuck in that range, it usually is a tell sign that it's about to leave that range. There's some sort of action that's happening. People are trying. It's like a tug of war that's beginning to develop. So obviously, I think you're seeing probably, some type of low being formed here. I mean, you're not seeing that. It'll be hard to see paper really follow through to the downside and short this market and break it down, because the mining stocks, the miners aren't making money here. They're just going to run production down, is all they're going to do if they break the market. But that's why I buy the physical, because I'm not trying to rely on the management and the operations of a mining company, because you have so many more risks with regard to that. You're just watching the metal prices, and like you said, over time, if it mirrors the dollar, if it mirrors interest rates, or economic activity, or some type of geopolitical event, or something of that nature, or just solar or technology, or something that gives silver some type of reason to catch the investor's eye again, the physical market is still very, very small. It doesn't take a lot to come in and start scooping the stuff up. And oddly, you saw some metal come onto the exchange a couple weeks ago about I think it was like 14 million ounces of silver. Yeah, that could just be basically refiners and some of the authorized participants or players that have a book of silver. Nothing's moving right now, so they're putting it onto the exchange, selling a December contract against it, making some spread off of the between the spot and the December futures, just to get some sort of cash flow and reduce their carrying costs.
Aren't there many gold miners that at current prices were way above production costs?
Yeah, I think the production costs have been rising. I think on some of the big ones like Newmont. I think they've been rising up towards closer to $1,700 an ounce.
Is that because of energy prices going up?
Yeah, energy. I mean, you got the strike that's going on in one of the biggest mines in Mexico right now. That's costing them $3.5 million a day, which actually turns out that's one of the largest silver mines in the world, actually, and that's been halted because of a massive labor strike. So these mining companies are getting hit. As cost of living has been going up in all these countries.
Is this it, Bob? Fresnillo?
No, well, Fresnillo is another big one. I mean, you look at the long-term chart on that; it's like, ugh.
I mean,
Newmont,
this is the one that that Mexico owns. It's state-owned, isn't it?
I'm not sure on that side, but Newmont is the one that that they're. I don't have it offhand the name of the mine itself, but Newmont Mines is the one that you want to look at, and that's been that's that's the biggest guy in the block. And you look at the long-term chart on that thing, and it can't get it out of its own way. I mean, it's telling that there just is not a lot of interest from institutions into this group.
Look at where it's coming to on this monthly. I tell you what, you've given me a lot of ideas during this interview. I wouldn't have pulled this up. This monthly level in Newmont is really important. Look left. If you're a trader, you look left, right? So you look left, it was a pivot here, it was a pivot here, it was a pivot here, and we're approaching it again. So I don't know. I think the $35 Newmont 36 looks pretty good for a long.
Yeah, I mean, but I mean, these mining companies have given up almost all of the gain from 2020's lows. I mean, a lot of them. I mean, there is a lot, sentiment is horrible right now across the board in the industry. So, but that, like you said, from a contrarian standpoint, that is what you want to see. And that's what I try to tell people as part of investing in this asset class. The highs are great, but the lows, and they make you wish you never bought this stuff. I mean, but that's just the way the industry works, or the asset class works.
That's when you have to add on. Let me, Bob, you do store the physical metals, so people could buy metal from you all, across the board, gold, silver, platinum. What do you think things will be like? I keep thinking about next year we could have one candidate being impeached and another one on trial. I mean, how do people know that they're ever going to be able to get to the gold that they have stored anywhere outside of their house if things deteriorate?
Well, you don't even need that to happen. I mean, look at COVID when that happened, and a lot of facilities were inaccessible, for a short period of time. I mean, it doesn't necessarily take a political event to create disruption or chaos. It may just take some type of economic event, and that's one of the reasons why I started a depository, because I looked at all these risks that we have out there. The potential of some type of executive order or that type of. But I don't really. The metals have been really disengaged from the monetary world for some time. So I don't really see them going after the physical metals. There's really no reason to it because the public doesn't, most of the public doesn't have any physical metal whatsoever. But the advantage that I've kind of looked at and what made me different is that we're the only depository in the country that's not owned by a gold dealer or financial institution or like a cash in transit company like a Brinks. So we are purely a storage company, and then from the metal side, when I buy and sell metals for clients, I do that as a subsidiary of my registered investment advisory company. So I call myself a purchaser representative. So I don't act like a dealer from a standpoint of these massive markups that you've been seeing, especially the last 3 years. I've really kept those premiums as low as possible, and I put all the prices right on our website. So you just go right into the buy metal section, and it'll show you what the premiums are over spot. And so you can see that my concern is making sure people have the opportunity to make money when they buy this product, not necessarily make me money as a dealer. And that's been a very frustrating thing. I've talked to so many people over the last 3 years that just feel like they don't want to come back to this asset class because they had just had a very bad experience.
They got ripped off on. They got ripped off on spreads.
Yes,
So
big time.
okay.
Yeah.
Well,
and on top, yeah.
Go ahead.
And on top of that, the premiums have collapsed. So, so these dealers that were charging $18 over spot, $20 over spot for Silver Eagles, now the bid's like $2 or whatever it may be. I mean, so that's not something they're going to be able to overcome anytime soon. And people are learning that, the mantra of the dealer, of a lot of these physical dealers, of fear mongering and telling you that this is an insurance policy and getting you convinced that you're going to pay whatever you can to get that insurance policy. People are realizing, wait a second, this is just another asset class. It provides sanctity, in times of uncertainty, and that's really one of the roles of the metals.
Okay, well, you're getting a rally in silver today from these lows, Bob. Maybe we at least get some type of bear market rally. I'm not sure this is it yet, but
it would be interesting to see if we get an outside update here.
Yeah, so we'll see. Here's a little more of a shorter term view. So it's tried to break down. It's not. Looked for stops here. Probably going to look for stops over 2320 now, and get some type of fib retracement of this recent decline. So
what do you? I mean, you've been in the business obviously a very long time, but when you get caught in this sort of trading range sort of trap, that we're kind of seeing in the middle. So there just isn't. The underlying physical market really not reacting. This is all CTAs and positioning, whether it's adding or to length or adding to the short side, or reducing when things don't go their way. When you see this sort of pattern of choppiness and start to do you see this base where it explodes out of it, or do you see it sort of wherever direction it goes, it just starts to grind in that direction when it finally breaks out?
Well, I was bullish down here looking for 24. It exceeded my expectations. I got out early, and then I got short up here. So it doesn't matter to me. I traded.
Mm-hmm.
So I'm more tactical, but I also have a longer term view, and that's here on the weekly. Looks better on the daily here. That we're good. There's a harmonic pattern that takes it down to this 2040 level. I have a couple of hits here, and that would hold these lows made in March. But the shares will be making new lows, and people are already fed up here. Can you imagine how fed up they're going to be? $2 lower, huh? 250 lower from here. So that's where I back up the truck sometime this fall.
Mm-hmm.
That's my strategy.
And I think that it's important because I get a lot of people that that'll ask me like DMs and that type of thing on your views when you look at the markets from a trading tactical standpoint versus a longer term investment standpoint. Maybe you could kind of give, because there's some people that may follow me that doesn't follow you as much and understand your positioning, and maybe you could kind of explain, when you make these calls, they're like, my God, I thought he was long, or he was long term, bullish. Now he's looking for complete washout. yeah, it's more of a trading side for you, just not necessarily.
I think this will be the last washout. I've already told people that I work with that after we get down here in silver and we get down here in gold, if we do, that I won't trade the short side of the precious metals market for 2 years after that. I might be tempted to, because I'll see, nothing goes straight up without corrections and nothing goes straight down without bounces. But that's the end of my bear hat in the precious metals this fall. So I won't be confusing your people. I'll only be buying breaks.
Well, and it's interesting because I put out a tweet, like kind of a thread. I looked at the 2008 low in the silver market, and you're seeing a very similar pattern of these series of inverted head and shoulders and this sort of walking up the wall of worry that you saw back then. And in 2010, 2011, when the thing started to rev up, it was really more on the short side of the hedges that were blowing up that started taking silver straight up, not necessarily the physical market. So it's almost the same thing happening all over again, where people are, the paper side is not trusting at all, and they're looking at it from the traditional interest rates are going up, so let's short the metals, or the dollar is going to go up, that type of thing. But that can catch a lot of people off guard.
Well, the record short position in gold that everyone's been talking about tells me one thing, that the type of bottom we'll get will be a spike in nature, where you'll have a huge decline intraday, and it ends up like what you're looking for in silver, an outside day to the upside, because shorts are going to come out of it quickly. So I'm looking for a spike low. It'll be like a key reversal type of day is what you could look for to, to have a very good sign that the low is in.
Right.
Shorts, I have to scramble, and I have to scramble here too. So, best way for people to get a hold of you and discuss it. Everyone, if you're a physical silver buyer, check out Bob's prices. Make sure that you're getting good deals. He was giving tight spreads when people were charging, $10, $15 over spot for silver rounds. So give Bob a chat. Where can they find you, Bob?
Our website is goldsilvervault.com. And then on Twitter, it's Profits Plus ID Idaho. So feel free to follow me on there. We'll try to put out some pertinent information, at least things for people to kind of watch and consider. I'm not a big fan of fear mongering and just throwing a lot of clickbait out there. I try to help people along this entire journey, just as much as we're all going through this together. So, no one's going to be absolutely perfect in this market. I've learned that over 30 years that, you learn to be humbled. No matter what happens in the marketplace, it never goes your way right away, or sometimes you do get lucky. So, but no, I appreciate the opportunity to be on here. And I definitely, anyone that's, that's new to listening to Dale, it does a great job of analysis, technical analysis, watching the charts, and just brings a lot of market experience with him.
Thank you, Bob. So I hope you have a good fall. The silver low will be here this fall. And everyone, I'm going to take partial profits on the yen short from 60 after the CPI number. Remember, on every trade you're out there, take partials. You have to get paid to make a living. And you could join the team in 12 minutes on the morning edge, and we'll see everyone tomorrow. Don't just count your pips, count your blessings. Adios, everyone. Thank you very much, Bob. And I'll talk to you in the winter.
Sounds good. Thank you, Dale.
No, you know what? I'll talk to you in the fall, because I'm going to buy physical. When I go into some more physical, I'm going to be stacking. So thank you, buddy.
Sounds good. Thank you.
You'll hear from me. Adios, everyone. See everyone tomorrow for ECB. Okay, Mandy. Yeah, let's get physical. You're Olivia Newton-John now, right? Laura, how about you? All right.